Hello, and thank you for joining us today for this seminar presented by ARTA's Pension and Financial Wellness Committee. We're pleased to offer a series of financial wellness seminars throughout the year to create an opportunity for education on topics specific to retiree financial wellness. Since ARTA was formed in 1963, we focused on supporting our members in an engaged and active lifestyle in retirement. Our holistic approach includes one of the best benefit plans in the country, as well as many additional programs and services, including our ARTA Perks discount program, physical wellness events, social opportunities offered through our regional branches, scholarships for family members, and of course, seminars like this one. ARTA also serves as an advocate for teachers and retirees, using our collective voice to draw attention to the ATRF and teachers' pensions, the seniors' drug plan, and the impacts being felt in healthcare in rural communities. Many different factors allow ARTA to maintain such a wide reach, but in the end, because we were created by retired teachers, for retired teachers and like-minded professionals, we remain dedicated to retirees. With that, I will pass things off to ARTA's Treasurer and Chair of the Pension and Financial Wellness Committee, Lawrence Reichen.
Welcome. My name is Lawrence. I'm ARTA's Treasurer and Chair of the Pension and Wellness Committee. I'm joined today by Pension and Wellness Committee members Craig Whitehead, Larry Hartell, and Elaine Levesque. Just some housekeeping. As you have may noticed, we have disabled attendee video and audio capability. This will help ensure a quality experience for all participants by limiting web streaming. It also allows us to record this webinar without breaching your privacy. With your audio muted, we encourage you to use the Q&A feature found at the bottom of your screen to submit your questions. You can submit questions publicly so that all attendees can see them, or submit them privately so only the ARTA staff will be able to see them. Our team or the speaker will respond to questions at the end of the seminar. A reminder for participants that this presentation is for informational purposes only and should not be used to replace a consultation with trained legal, tax, or financial professional. Please contact a professional financial, tax, or legal advice related to your specific circumstances. With those housekeeping matters completed, ARTA is pleased to present today's sessional informative presentation of ARTA's 2024 annual report. This webinar will be of interest to retired teachers as it pertains to the health and longevity of pensions for teachers in Alberta. I would like to welcome today's speakers, Rod Matheson, Julie Joel, and Andrew Tamboni from the Alberta Teachers Retirement Fund, ATRF. And we'll turn it over to them.
All right. Well, thank you very much, Lawrence. I'm Rod Matheson. I am the CEO at ATRF, and I'm joined today, as Lawrence said, with two of my colleagues, Andrew Tamboni, who is relatively new to ATRF. He is our VP of Investments and Funding and joined us a few months ago, so he's likely a new face to the ARTA folks. But my other colleague, Julie Joel, who's our VP of Pension Services, I think is a familiar face to the folks from ARTA, and Julie and I have spoken at a number of different ARTA events in the past. So thank you very much for this opportunity today, and the timing of having this session today is excellent. In fact, thank you to the committee and to Daniel. When Daniel first sent the invitation, I asked if it's possible to push it back just a little bit to today, because for a change, we're going to be able to provide you with very current information and share with you information that later today, if all goes well, will be posted on our website, because we are releasing our annual report for our 2024 fiscal year. So we're very happy today to be able to provide you with a very up-to-date snapshot of the Teachers Pension Plan and ATRF. Julie, if you go to the next slide. Yeah, I just want to say, together, the three of us are going to provide you with an update on the plan's funded status, talk about our investment results, and also talk about the services we provide to members. And before I get started or go any further, maybe I'll just say many of you are aware of some developments related to AIMCO, who's our investment manager, and the government of Alberta, and some matters that took place about a few weeks ago now. But we know from the requests we've received, there are many questions our members have had about the potential impacts of what happened to the pension plans. So I'm just going to say, if you just hold off, we know there are questions, and we will provide a bit of an update and speak to that a little bit further when we get to Andrew's section on investments. So with that, we'll get started. This slide, I want to just speak for a moment on this slide and a couple of important points that I want to make out of it. If you start on the right-hand side of the slide and the pension plan sponsors, the way our pension plan is set up, the plan sponsors, who are the ATA and the government of Alberta, they establish the plan rules and set the benefits. And then our job as ATRF, the Alberta Teachers Retirement Fund, and as the plan administrator and trustee, is to then carry out managing the plan and acting as the fiduciaries. And I want to just talk about the slide across the bottom there, because we feel we play a very important role with those plan sponsors. We are the pension plan experts. We understand the teacher's pension plan inside and out. And we want to be, and we believe we are, a trusted advisor to both sponsors. So we play a very important role in this landscape of the Alberta Teachers Pension Plan. So now let's get into the actual results for last year. And without further ado, I'm pleased to show that the Teachers Pension Plan, as at August 31st, 2024, as you can see at the very right end of this chart, is 102% funded. So what that means in pension language is the assets of the plan at $24.8 billion are more than the value of all of the liabilities of the pension plan, all of the future obligations that the plan will meet to pay pensions for all of our active and retired members. You probably recall last year, in 2023, we, for the first time in the history of the plan, exceeded 100%. The plan was fully funded for the first time in its history last year, and I'm pleased to show that that trend is continuing, and at August 31st, 24, the plan is 102% funded. And let me just talk for a moment about what that means, or how we got there. We are required at least every 3 years to file a formal valuation with the Canada Revenue Agency as a pension plan. And this year, we decided that given the health of the plan, we didn't need to file a full valuation. We did a projection, and we got comfort, and the board of ATRF has comfort that the plan is in a very robust and stable financial position. So we did not file a complete actuarial valuation. And I'm mentioning that because that means the funded status that I mentioned and the financial results that we're speaking about are based on projections that we did with the plan's actuary. They are not based on a full valuation filed with ATRF. And I'm not going to go into the details using some of the concepts on this slide, but what I wanted to say with respect to this slide is I guess I can't stress enough how serious the board at ATRF takes its responsibility to do everything in its power to ensure the long-term sustainability of the pension plan. So the board establishes and uses various risk management tools that you can see referred to here: margins for adverse deviation, or if you like, a cushion for a rainy day; fluctuation reserves to smooth out the volatility in annual investment returns. Now that the plan is in a surplus, that in itself provides additional buffers and tools that the board can use to manage the risks in the pension plan. We do constant stress testing and stochastic analysis and are constantly monitoring the financial health of the plan. So all of that is just to again say and to assure you that the board takes very seriously meeting its fiduciary responsibility to really try to do everything possible to ensure the long-term sustainability of the pension plan. I'll spend just a moment now and go dive a little bit more into the actual results for last year based on that actuarial projection that I spoke of. So the column to the left, the 2024 results are there. It shows, the number that I spoke of earlier, the $24.8 billion of assets from an actuarial point of view, including one of those risk management tools that I spoke of, the fluctuation reserve. That is that line across this condensed balance sheet is the fluctuation reserve that allows us to smooth returns in the capital markets over 5 years to try to buffer or smooth the volatility that we know happens year over year in the capital markets. And then the liability side of the balance sheet, you can see in that condensed version, 24.385 billion of total assets, and you can see the breakdown by active members and the liability, the value of the liabilities for future obligations for active members, inactive members, and the pensioners and beneficiaries, bringing us down to a surplus of $415 million, and that's the 102% funded ratio that I spoke of. Now, let me just take a minute and talk about something of, I assume, interest to the folks on this call. One of the things that is good news for members and a challenge for a pension plan is longevity, and the reality that teachers, as well as others, but teachers in particular, are living longer, and that means a challenge to a pension plan. You can see from this slide what happens over time in terms of the ratio of active members in the plan to retired. And as the plan has more and more retired members and fewer active members, there are fewer active members that are able to absorb the shocks to the plan through contribution rates, because retired members don't make contributions. So our plan, like most pension plans, is maturing over time, as demonstrated by that ratio. The other thing that's happening is teachers are living longer, and as the slide says, every time the life expectancy goes up by 1 year, that causes the value of the liabilities of the plan to increase by 3 to 4%. And that's a big hit to the liabilities and something that we have to be very careful when we're managing the pension plan. We did a mortality study specific to the plan a few years ago in 2020. And what we learned is a few interesting statistics coming out of that. A male at age 65 is now expected to have a life expectancy of 23.9 years, or live to 88, almost 89 years of age. Now that's different by almost 2 years from the previous longevity study we did. At that time, a 65-year-old male was expected to live to 87. Females, based on our most recent mortality study, are at age 65 are now expected to live to 91.2 years, which is up from 90.7 years based on our previous study. As I said, that is great news for members of the plan and for retired members of the plan, something we have to be very mindful of and pay a lot of attention to, though, as we administer the plan and think about the long-term sustainability of the pension plan and how the liabilities of the plan will be changing over time as longevity increases. I'll now just turn to a quick discussion about contribution rates. And contribution rates, based on the funded status of the plan and the good health of the plan, the board is happy to announce contribution rates will remain the same this year as they were last year. No change to contribution rates for teachers. And on the next slide, I will just show you what those contribution rates are for information, but to point out one thing in particular. So you'll see the column under teachers and contribution rates. Total contributions by teachers are 9.29%. You'll note that that is slightly higher than what the government's contributions are at 8.92%, and that is entirely attributable to that line on the cost of the additional COLA. So COLA, cost of living adjustment. Teachers agreed a number of years ago to make an additional contribution fully funded by teachers to bring the cost of living adjustment in the pension plan from 60% of Alberta CPI to 70%. that additional 10% of inflation protection or COLA adjustment is paid for entirely by teachers, and that's the additional 0.37% of salary that you can see in the column there for teachers' contributions. And one final slide on contributions that we like to show is, again, the good news story of how over time, so if I start at the right-hand column, 2025, contributions today are made up of only current service cost, which adds up to 18.21% in total between teachers and the government. But you can see back in 2015, contributions were as high as 26 and a little bit percent, because there was that green bar in this chart. There were significant contributions required to pay for previous deficiencies in the pension plan. And under the plan rules, those deficiencies must be amortized over 15 years. You can see the green bar in the profile of how those deficiency payments have come down over time. And because of the strong financial position of the plan, the deficiencies were reduced or eliminated much earlier than the 15-year required period. The final deficiency was paid off in 2023 and for the last 2 years now. And we expect going forward, current service costs will be the only contributions that are required. So that's a very quick run through of the funding status of the plan, because I want to now turn it over to Andrew, who's going to provide an update on the investments at ATRF and our investment portfolio.
Great, thanks, Rod, and I'm very pleased to be a part of today's webinar. But before diving into last fiscal year's investment results, I want to take a moment just to talk on the roles of, actually, next slide, yep, the roles of ATRF and AIMCO. And this distinction is important because it helps explain the approach being taken in the investing of your retirement assets. Our role at ATRF is to set the important investment strategy, and we do that through the Statement of Investment Policy and Goals, which we also call our SIP and G. And through that, we determine the strategic asset allocation or the long-term asset mix, the balance of the fund's investments between equities, bonds, private assets, and other asset classes. And those are based on the plan's liabilities, the plan's risk tolerance, and our funding needs. We do allow for a degree of latitude to deviate from our target asset mix, but the investment manager, which in this case would be AIMCO, obviously, is expected to manage the portfolio within the risk and diversification parameters that we set. And we closely monitor AIMCO and our asset mix as part of our oversight of the fund. So ATRF has the important role of setting investment strategy. AIMCO, on the other hand, is responsible for implementing our strategy. So they make the decisions within each asset class, selecting individual investments, implementing underlying investment strategies as part of the portfolio, engaging other third-party investment managers, managing risk, and seeking opportunities to enhance returns. These decisions matter, but as you'll see on the next slide, the overall asset mix is really the dominant factor in achieving long-term returns. And before I get to that, the next slide, I'll turn it back to Rod for his comments on the recent developments at AIMCO.
Thanks, Andrew. Yeah, as I said at the beginning, we know from the number of emails and phone calls that we received, members were wondering, and I think legitimately so, had some concerns about the announcements and the activities that took place a few weeks ago with respect to AIMCO. So just very quickly to recap, without any notice or involvement by us, we weren't part of this. The government of Alberta made a decision to relieve the entire board of AIMCO, and they appointed the minister. At that point, they appointed the Minister of Finance as the sole director of AIMCO. And then in that capacity, he then terminated the employment of AIMCO's CEO and 3 other executives. They installed who was at the time the Chief Deputy Minister for the Government of Alberta, Ray Gilmore. They appointed Ray as the interim CEO. And then a short while after, they announced that they had appointed Stephen Harper as the new chair of the board of AIMCO, and they announced the appointment of 4 other board members, including the Deputy Minister of Finance. And we've, of course, as I said, we've received a lot of questions on that in the period since. Questions around, is this development at AIMCO going to impact my pension? Is it going to impact the way my pension is invested? Is it going to politicize the way AIMCO invests the funds? And those are all valid questions, and we have them as well. I guess what I want to do is kind of reinforce the messages that we have on our website to reassure all of our members that we don't believe it will have an impact on how our plan is invested. We have not seen any evidence of political interference. We have not seen any evidence or anything to concern us with respect to the way on a day-to-day basis AIMCO will operate and continues to operate and continues to invest, very much as Andrew described, and managing in accordance with our investment policies. I'll just maybe wrap up by saying, of course, our job is to be vigilant and to watch for any of those concerns. We will be paying attention, and we will be watching for any signs to suggest that we should be concerned about the way the funds at AIMCO are being invested. And if we see that, of course, we would have to take actions accordingly. But I want to reassure everybody again that we have not seen anything to date, and we are not troubled as far as the teacher's pension plan is concerned with the developments that happen at AIMCO.
Okay, so turning to slide 14, thanks for that, Rod. So I alluded to the importance of setting an investment strategy, and we spend a lot of time thinking about investment strategy at ATRF. And the reason for that is that many studies have shown that up to 90% of a portfolio's long-term return is driven by the long-term asset allocation. And only a small proportion comes from picking individual investments, also known as security selection. So getting the investment strategy correct and getting an optimum portfolio is very key to long-term success. Turning to slide 15, this slide presents the fund's strategic asset mix as of August 31st, 2024. It's designed to balance growth opportunities like equities alongside stabilizing assets like infrastructure and real estate. The long-term government bonds provide reliable cash flows and closely align with the plan's long-term liabilities. The market-neutral strategies aim to generate returns independent of market direction and therefore enhancing portfolio diversification. In 2023, we completed an asset liability study. It's a very important exercise that we undertake every 3 to 5 years, or when conditions change and it warrants a review of the asset mix. And that became effective in January 2024. And we made adjustments, including the addition of private credit and timberland and farmland. As well as that, we made changes to the allocation to long-term government bonds by increasing that allocation. We also increased our allocation to infrastructure investments while reducing public equities and real estate. Turning to the plan's investment results, fiscal 23 to 24 was a good year in that the fund's 6.91% return exceeded the best estimate long-term return assumption of 6.5%. And that is our current measure of progress towards keeping the plan financially strong. However, the plan had a disappointing year of performance relative to the plan's benchmark. And this was predominantly driven by challenges in the real estate sector, where the effects of higher interest rates and the shift to a hybrid work model has had negative impacts to the office sector. That is a challenge that is not just unique to ATRF. The effect has been seen by many of our peers across the industry. On a longer-term investment horizon, the 4-year return was just below the expected return, and over 10 years, it has exceeded that objective. The benchmark relative returns have again been challenged relative to the benchmark, and that again is predominantly driven by the performance and some of the challenges we've seen in real estate over the last 2 years. I'll turn it over to Julie, I believe.
Thank you, thank you. Just before I go to my section, which is on member services, we do have 2 questions in the chat that I think would be appropriate to try to address now, because it's related to investments. So the first one is, are we invested in pipelines? Heard that's a risky investment, especially for the future. So maybe Andrew, that's one for you.
Yeah, I'm not. I don't recall off the top of my head AIMCO's specific investment in pipelines, but I believe we do have exposure to pipelines within our infrastructure portfolio, and pipelines can be an attractive investment because they do have very long-dated contracted cash flows, and they often have inflation adjustments as well. So for a pension plan, pipelines and other infrastructure projects where you do have visible long-term contracts that are, particularly if they have some inflation sensitivity, are very attractive assets for a pension plan with long-term liabilities that has a similar profile. The importance, of course, is to ensure that the portfolio is diversified, and AIMCO's infrastructure portfolio is well diversified, including any pipeline investments that would be within the portfolio.
Thank you, Andrew. And I think the next one, maybe Rod, what gives the Alberta government the right to dismiss AIMCO's board?
Well, so AIMCO, the Alberta Investment Management Corporation, is actually created by law, by statute. There's an AIMCO Act, and under that act, the board of directors of AIMCO were all appointed by the government using an order in council. So it goes through a process that the government has, and the cabinet of the government is the body that approves orders in council and through that mechanism, every one of the AIMCO board members was appointed by order in council. And so their ability to, or their right to dismiss the board was because they could simply rescind or revoke the orders in council that had appointed those board members in the first place.
Thank you. I don't see any other investment question. I see a question on the cost of living adjustment, and I'll be pleased to cover it in my section. So with that, we will talk about member services. So good afternoon, everyone. I'm VP of Pension Services, as Rod mentioned, and I've always pleased to present to our members and ARTA in particular. You're such a good group to work with, but also you are ultimately our raison d'etre, the retired members. That's what the pension plan is about, and we're so happy to be there, you know, throughout the journey of the teachers from hire to retire and after. So what do we do? In a nutshell, we're there for you. We're providing support, expert services when it comes to your pension. I'm an actuary and I love numbers. So there will be a few stats on my slides, hopefully of interest. And this one in particular has some overview of who we are proudly serving, almost 88,000 members now in the pension plans. And the retired members are representing 37% of our population, so a little bit more than 32,000 members. strongly in the plan and growing. Definitely, it's a growing section of our membership, and we're very happy to see this. It is a bit related to the longevity that Rod mentioned. We have more members living longer, and that's a great thing to see from a pension perspective, because we are equipped to face that challenge from a funding perspective. One sign of longevity, you see some stats here. 54 members are now centenarians, so more than 100 years old. It is a growing number, although a little bit stable from last year. I think it was the same, but it is growing from, 10 years ago. We were not seeing that many centenarians. Our oldest plan member, always very impressive to see, 106 years old, and they've been receiving their pension for 50 years. 50 years, so that's quite impressive, and we're so happy we can deliver those benefits to our members. Our average annual pension is also of interest. Often when we send our member report, retired members really like to see all these numbers. So this is the average of pensions and payments. So all of the pension that we're paying every month, the average per year is around $38,000 of pension. We have a few stats here in terms of average age at retirement, average age of our retired members. So as you can see, a bit of an increasing trend, again, all related to longevity. So we have now 73 years old on average for retirees, and still a very stable trend in terms of age at retirement. So on average, teachers are retiring around 60, and that's been pretty consistent for the last 20-something years, and with around 25 years of pensionable service at retirement. We work with employers. Just a quick note on that. You all know we work with school boards, but we crossed an important milestone. We have now 104 employers. So we crossed the 100 mark last year, and we are welcoming new charter schools and new private schools almost every year. That's another slide with a lot of numbers, but just to show that we're welcoming retired members, new retired members every year. Around 1,000 of you are taking their retirement per year. So last year we had 1,049 retirees starting their pension. And as you can see, it's been pretty stable over the years. So around that 1,000 mark every year. And that's what we're expecting as well for the next, foreseeable future when we do projection of membership and demographics. And our membership, as I mentioned, is around 88,000, and we're projecting to see it around 100,000 by 2035. So 10 years from now, again, the majority of that growth being in the retirees. I mentioned the average pension that we pay every year. The other very impressive number for me, and very proud, is that we're paying $100 million per month of pension, which equates to $1.2 billion of pension that we pay to retired members, teachers in our pension every year. So quite impressive, and so proud to do this. And most of you are living in Alberta, but we do, so 85% of retired members are still living in Alberta. Sorry, I changed my slide. But we have a few, of course, out of province, a few more in BC, and we have a few in various countries out there, and we're proudly serving people living wherever they are and enjoying their retirement. Quick note on Project Lantern. If you attended these seminars before, you would have heard me talk about our Dear Project Lantern, which is a very nice name to say that we are modernizing our tools, our process. We have great foundation, great foresight in terms of how we work efficiently, bring value, but at the same time, things are aging, technology in particular, and we need to modernize, and that's what Lantern is about. It's really making sure that we have the tools, the systems, the process, and the people that are needed to continue to deliver the high standards of services that we are so proud to provide to you, and continuing to do so in the future, continuing to deliver on those expectations and evolving with times and how we transact and interact with members going forward. It's a continuous evolution, and we need to be there for you. Cost of living adjustment. This is definitely a topic of interest to this group. And we had many questions, and we're trying every year to proactively provide information as soon as possible. I know how interested you are to know what will be the adjustment in the plan. So just a little bit of a context for if you're a newer retiree or want to know more about cost of living adjustment. It is a provision in the plan that helps your pension to be adjusted with inflation. So it's a partial protection against inflation, but it's also a guaranteed adjustment. So it's a plan provision that is not in every pension plans. It can be quite unique in these days and age to have a guaranteed portion of inflation protection. Many plans are now more in the what we call conditional indexation of pension. Why? Because it's a very important lever to be able to weather financial storms. But in our case, it's an important provision. It's there, and it provides inflation protection for your pension. So every January 1st, your pension is adjusted based on the Alberta Consumer Price Index increase for the period, not the calendar period, but October to November. And one of the questions, in fact, in the chat was, why is there two type of formula for the adjustment? And as Rod mentioned in the previous slide, the reason why we have one portion of the benefits that are adjusted at 60% of the inflation increase, and another part at 70%, it's because in 1992, the teachers and the government made an agreement, and that was one of the aspect of the agreement. There were other aspects to it, but in particular, the teachers wanted to increase the inflation protection to 70%, and they've agreed to pay for that 10% additional protection. Whereas the base plan is 60%, and it's shared between the government and the teachers when it comes to the cost of funding that benefit. Whereas the 10% additional is fully funded by the teachers. And that's why it's separated in two. And it's really based on your service, your pensionable service that you've accumulated. So if you work as a teacher before January 1st, 1993, and accumulated service back then your part of your pension will be adjusted, indexed at 60% of the inflation. And then if you work and teach after 1993, or 1992, I should say, then there's a portion of your pension that will be indexed at 70%. You see all these numbers there, the math, we use the increase in the Alberta Consumer Price Index, then we apply the 60% or the 70%. If you want to know for yourself as a retired member, I invite you to go in My Pension, your member portal, secure member portal, where you see all information about your pension that is personalized, that is really for you. And we have a breakdown of the calculation of your own inflation adjustment, and you'll see the 60 and the 70% if it applies to you. With time, over time, we'll see less and less of the 60% only because, you have to have service before 1992. So again, I just want to reiterate that it is a unique, important feature of the plan provisions. It's a guaranteed indexation. Again, some plans don't have any or don't have it guaranteed, that it will be conditional to the financial situation of the plan. And I'm saying that because we often have the question as to why it's not 100% inflation protection, or why, or can it be, or when will it be 100%? And as any other plan provision, first of all, it's the sponsors deciding on those plan provisions. ATRF are applying the plan rules. We're not deciding on them. But second, also, it's like anything, any other benefit. A benefit needs to be looked at holistically in terms of what's the objective, what are we trying to, what the plan wants and can pay, and a benefit needs to be funded. So inflation needs to be funded. It's not free, and even more when it's guaranteed. That means you need to have enough money for any scenarios. And if inflation, increase a lot, then you need to put more money in the plan. If inflation is as expected, then that's good. But guaranteed inflation needs to be funded accordingly, and there's a premium that is associated to that. It's like an insurance, right? You need to plan for the worst. So 100% inflation protection comes with a financial impact, and therefore it's a question of what does the plan and the plan sponsors want and can afford in terms of the plan, and what's the objective. Having a partial inflation protection is a really good provision, and then it's a question of what's the right balance between funding and what the plan should or could pay. I hope it helps answer the question. I'm reading it again. It was, could you please explain why there are two calculations? So I'm hoping I covered it. Looking at the time, we're not too bad. My last slide, it's about, of course, we love to interact and connect with all our members. And one way we do that is, of course, communicating with you on many topics. And we have communication throughout the year, different channels, different way of connecting. So we're listing just a few here that we thought would be of interest. Definitely, like Rod mentioned, we're so happy today, like literally our annual report and member report will be posted in the next few minutes. It might even be live now. I just didn't have a chance to look. So pretty much everything and more, in fact, in what we presented today, you will find in our annual report and our member report. So really, I invite you to have a look. There's an electronic version on our website, but you can also receive it if your preference is electronic, you'll get an email notification. And the member report, if your preference is paper, you can also receive it by mail. Same thing for your annual pension information statement. This is for you. This is your personal information about your pension, your beneficiaries, the pension option you selected, what happens if you pass away, your net pension after tax. Like, this is your statement that really captures everything about your pension. You can access it anytime on My Pension during the year, and select for your electronic version if that's what you prefer. And if you want a paper copy, you also select it, and we send it by mail. We have newsletters that are hopefully timely and bite-sized information for you to be informed of what's happening with your plan. And we're really using a lot of the email notification for that. Why? Because it's timely, it's convenient. You receive it right away instead of waiting for it in the mail. So if you haven't done so, please update your email address. This is really a good way to stay connected with your pension. It's the time of the year, tax slips. Again, we're really trying to send the information out there as soon as possible to give you when are you going to receive it. But tax slips, they've been mailed already. So, and they're available electronically, so you should receive that if not already. So plenty of time for tax season. We do survey because we want to hear from you. And my last point is webinars. Why? Because we're so proud this year. We've introduced a webinar that is specific for retired member. I don't know if some of you attended. I hope so. We collaborated with ARTA. It was such a great collaboration and great success. We had two webinars, one in December, one in January, with great attendance. And We're doing 2 more that you can register through My Pension, not through ARTA this time around, but it's the same webinar, same content, just another 2 days to catch as many people as possible. And you can register through My Pension, again, our secure member portal that I'm hoping everybody can and will use. So with that, we have 15 minutes left. And I see that there are some questions that came in while I was speaking. So I will just make sure I can see them. I have 3 screens and 1 mouse that sometimes doesn't collaborate. Okay, let me, I think they're all investment related. So Rod and Andrew, that's an interesting one. I think Andrew could be a good one for you. What are some of the preliminary safeguards or strategies given to the pension plan, given the potential of tariff?
Yeah, thanks,
And I
Julie.
think, Julie, the second one, the next one is
related
very
to-
similar.
Yes, it
Yeah.
is. Okay,
Yeah.
you see the questions. Yeah, it's true.
Yeah, so
Yeah.
they're very, very closely related, cover the same topic. So yes, of course. So tariffs, as I'm sure all of you are aware, can have a disruptive impact to global trade, and for an export dependent economy like Canada, it can have obviously fairly negative impacts. That said, at ATRF, through our portfolio, many of our investments, while we do have some investments in Canada, we have a large proportion of our investments that are outside of Canada, in the US and in Europe and in Asia. And so having a very diversified portfolio really helps with managing the potential impacts that we could see from tariffs that could be implemented by the US. Obviously, there's also an impact to currencies, particularly the Canadian dollar. And again, based on the fact that we have investment assets in currencies other than the Canadian dollar, we can benefit from the appreciation in those currencies. But we do obviously have concern of what the impact could be to the Canadian economy. And we do have obviously exposure to some exposure to Canadian equities. By far, our larger exposure is to the US and Europe and Asia. So while there could be some impact in some parts of the portfolio from trade tariffs, there could be other parts that may benefit from those. So how that will all play out, over the upcoming months as we move through this period, we will have to monitor and measure. And we fully expect that AIMCO, as the investment manager, will be on top of a lot of those risks and taking appropriate adjustments or placing hedges in the portfolio where they feel that those risks may be more impactful.
Thank you, Andrew. So Rod, and I don't know if the attendees are seeing the questions, so I will say the questions just in case it's not visible. So I would like to know why ATRF Pension can't pull out of the AIMCO control. Years ago, we fought against them having some control, have some control over our pension. And then Stephen Harper is now involved. Why? Those are not easy.
No, they're not, but and they're valid and happy to hopefully provide some perspective on that. When the question says years ago we fought against the government taking control, I think that's alluding to the same thing that we at ATRF and the Alberta Teachers Association and many other people were concerned with. Without our involvement, without any consultation, the government of Alberta did pass legislation that by law required us to move the management of our assets to AIMCO, because prior to that, of course, people probably know and recall that we were managing the investments of the pension plan internally within Alberta Teachers Retirement Fund, and we had a team of investment professionals to do that. But the government passed legislation, and while we expressed our concerns, while the board of ATRF expressed concerns and indicated publicly, including on the website, We do not and did not believe that that was in the best interest of the pension plan. We were not able to convince the government otherwise, and so we had to follow legislation, which we've done. And we have now moved the management of the investments of ATRF to AIMCO. But I want to just spend a minute to just go back to what Andrew talked about a few, in his presentation with respect to the very important role that we play relative to AIMCO. And that picture that Andrew showed with that nice stylized tree and then the roots below, the finance literature, there's lots of evidence that says the most important thing to the long-term success for a pension plan is how the pension plan, how we, as what we call ourselves the asset owner, the strategy and the investment policy that we set and the way we decide how to invest the funds in those asset classes that Andrew spoke about, that will contribute 90% of the long-term success. The fact that AIMCO is now managing the assets, and once we've given them the direction through the statement of investment policies in terms of how we want the plan's assets to be managed or invested, then AIMCO is responsible for implementing that. But they have to operate within the parameters of the investment policy we give them. They don't have latitude outside of that. They must respect and comply with our investment policies. So we're doing everything we can to ensure, and that's how we then laid out the policy that we want to deliver to AIMCO, and then we monitor carefully how AIMCO is doing at implementing our investment policies. As far as the choice of the chair, or in fact, for that matter, back to my earlier comments, the entire board is appointed by the government, the entire board of AIMCO. And their choice to appoint Mr. Harper as the chair of the board was entirely a government decision. Again, to be clear, clients had we and the rest of the clients of AIMCO had no role to play in that. No, we weren't involved, we weren't consulted. That's the prerogative of the government because they are the shareholder of AIMCO and the body that appoints all the board members of AIMCO.
Thank you, Ron. One of the questions was very similar. It was, why is the government able to make those decisions, take power over our pension or AIMCO? So I think, Rod, you covered that, and it's really by legislation. Right. They make the law, and we have to follow.
Yes.
One last on the investment. Oh, I think I lost this one. There was something about benchmark. Let me see.
Yeah, I thought I saw something about a benchmark.
Can you explain who sets the benchmark? Yeah.
Yeah, maybe I can just quickly comment on that. So when we undertake our asset liability studies, we generally look at benchmarks that align with the strategy that we're trying to implement within the portfolio, because that gives us a sense of the risk characteristics that we're most interested in as part of our portfolio. Some of those in assessing what benchmark is appropriate, there could be at times where we could have a discussion with AIMCO as well, given their activity or their background as an expertise as an investment manager. And we want to try and make sure that we have a benchmark, that ATRF has a benchmark that best reflects our risk appetite for a particular asset class. That is a very straightforward exercise when you applying a benchmark to public assets like equities and fixed income. It becomes quite challenging in the private asset space like infrastructure and real estate, where investment strategies and investment exposure can be very different to the benchmark, because there is no appropriate or easily identifiable benchmark that you could use for that asset class. So we try to make the best that we can in terms of our expected return in terms of a benchmark, and then manage accordingly around that. I will also say that while, yes, of course, we want to see the portfolio perform strongly from both an absolute return perspective and from a benchmark perspective, the most critical return that we need to achieve is the absolute return, because that ultimately is at the end of the day, it is that return that pays pensions, and not the relative performance to the benchmark. That, in our view, that is the gravy on top. Of course, we would like to achieve both, but in the short run, different asset classes can experience some challenges over the short run. And if we can achieve both objectives, or achieve a strong absolute return and outperform benchmarks over the long run, then the plan will be in a great financial position from both perspectives. But ultimately, the absolute rate of return is by far the most critical return.
Thank you, Andrew. There's a question about the webinar next Tuesday morning. So thank you so much. The webinar I mentioned that will take place specifically for retired members. So there's one on February 4th, which is next Tuesday, and February 26th. And no, they're not the same as the one today. So the one today is about our results and status of the plan and initiative at ATRF. The webinar that is specifically for retired member, it's about your pension, things to know about, how to change your tax, for example, how to access your statement on my pension, the different pension option as a reminder of what you've selected and how it works if you pass away. Question about what happened if you separate or divorce after retirement from your pension partner. So it's really about your pension, how it works, what you need to do and be aware of as a retired member, and what any type of actions that you need to take while you're retired to stay connected, informed, and prepared. So it's a little bit more about the plan and how it works versus the results as of today. Let me see. We have two more that are slightly related again to a decision from the government. The first one is it possible the government will legislate that ATA and ATRF will no longer be part of the pension in the future? That's a very interesting one.
I mean, the answer, not to be glib, and I'll expand on it, but the short answer is yes. And the reason I say that is, and it's not that I'm troubled, or not that that concerns me, but it is technically the answer is yes, because we exist as ATRF, and the pension plan, the teacher's pension plan, exists because of legislation. We are what we call a creature of legislation, and so is the pension plan. Unlike other plans, the teacher's pension plan, including the plan rules themselves and who the parties are, that it's the government and the ATA that are the sponsors, as we describe, is all captured in the Teachers Pension Plan Act. It even lays out the role of the ATA in terms of the plan rules and the process that would have to be followed if the ATA wanted to change any of the rules, and a process that would be there. ATRF as an organization exists because we're created under that Teachers Pension Plan Act as well. So it is the government's, I mean, at the end of the day, because the government controls legislation, they control, and yes, it is theoretically possible. Am I concerned about that? No, I'm not. And I'm sure the ATA would have a lot to say about that if there was ever anything to suggest that was going to happen. But I see a note here. ARTA Benefit Plans would like to answer this.
Oh no, they do that when they
Okay. I thought somebody else wanted to chime in. Okay. So that is the technical answer. The way this plan was created and is currently administered, the government does have a lot of control. And then the related question around, can we pull out or get complete control back with respect to what the government did. And again, almost a related and the similar answer is no, we can't, because the government did it by legislation. We'd be breaking the law if we didn't follow the act and have all of our assets managed by AIMCO. But again, the important role we play and the important tool we have is that statement of investment policies, our investment policy, which is what we design and decide on through the board of ATRF, and then provide that to AIMCO for them to implement. That is our tool, and we have complete control over that. We fought hard to make sure that in the relationship with AIMCO, we have complete control over our investment policy, and AIMCO must implement the policy and the directions and the strategic asset allocation within the risk parameters that are contained within that document. That is our tool, but we have no ability to pull any of the assets or the asset management back from AIMCO.
Okay, I think we've answered all of the questions. So thank you, Rod, Julie, and Andrew for presenting for us today. And thank you to all the attendees for joining. There will be a survey sent out following this session. It will take less than 5 minutes to complete, and we value your feedback as we plan future pension and financial wellness seminars. This now concludes our webinar. Thank you. Have a good day.
Thank you so much.
Everybody.
Thank you.